Media live on yorbamedia.com. All right, I've got Nick Santiago, president in the Money Stocks, on the show with us today. Ladies and gentlemen, pay attention. This guy's up well over 200% so far this year, and there's another quarter to go through. Nick, welcome back to the show.
Great to be back, Michael. Thank you for having me.
All right, thank you. All right, you woke us up a long time ago that one of the tip-offs, the tells, is JP Morgan for the stock. What's going on with that one?
Yeah, well, we talked about it even last week on your show. I said there was a nice bearish pattern forming, and that would probably go down there and test that 200-period moving average, which is right around the $50 area. So that has occurred. The stock has bounced up, but I'm still seeing more downside in the cards for this name. I do think tomorrow there's a chance for the stock to get a little bit of a bounce, but I think traders ultimately should look for this stock around the 47 level. Those individuals out there that are looking to get into JPM for end-of-year type play, I think 47 is going to be your spot. Be patient. It will get down there.
Okay. All right. What's next? JP Morgan, Apple?
Yeah, I wanted to talk about Apple because a couple of weeks ago I was on your show, and I guess Apple had some news, and I said it would trade down to the $450 level. Right now it's putting in a consolidation level around 484, so it's had a great bounce from the 450 area. Mm-hmm. This one still, believe it or not, has some potential upside. I think Apple ultimately, though, does top out around $537. So if anybody's still holding Apple from that point down there around the 450 level, there is still potential upside in the cards here, but nothing more than the 536, 537 area. That should be the end of its run. Okay.
Now, overall, though, we had a big top a few months ago, actually, back with 12. So, 675, some 700, just under 700.
705. That was in September of last year.
Thank you. All right. Overall, though, has this stock seen is it past the golden years? In other words,
it has.
Okay.
This stock is reminiscent now of Cisco and Intel from 2000.
All right. So anything from here should be either writing calls to protect your position or just buying shorts or getting out.
This is at best a swing trading vehicle for the next couple of years.
Okay. That's what I wanted to know. All right. Yeah. Another big name on the horizon, Google.
Yeah, now Google is a little bit different than Apple because it still has some growth potential. The weekly chart on Google is still hanging in there, but I think right now we have a top put in on Google in July, a lower high made just a few days ago. Google may go back up and test that high, but I think traders that are looking to get into Google for an end-of-year type play can buy this thing around the 530 level, which is the 200 daily chart moving average. I would not be jumping in this name right now.
Wait. 530?
It's at 830.
Oh, okay.
Did I say five?
Yeah.
Yeah, $830. That would be a good level for a decent bounce on Google. But right now, whenever I see a chart that's making lower tops, meaning the July high was up there around $927, and now the secondary high, which was made on the 19th of September, was around the 905 level. That's a sign of weakness. It's a sign of distribution. Traders that want to play this for a bounce around the $830 level would be the play.
Okay, all right. Are you playing it between 875 where it is now down to? You looking to play it down there, or just wait to buy it?
Well, I did play it at 904 at the top on the short side. Now I'm sitting out of it, and I'm just going to wait for pattern, and there could be a potential short down to 830. But I need the pattern first.
Okay, got it. Natural gas.
Yeah, I wanted to bring up natural gas because I was on your program, I guess about 2 or 3 weeks ago, and we talked about this, and I said, you don't want to buy natural gas. When the UNG, which is the natural gas, United States Natural Gas ETF, was trading up around that $20 area in 1990, I said that was a 200-period moving average. That's where natural gas would need to pull back, and you could see the UNG now is trading around 1841 today, so it's had a good pullback. But now I'm starting to get interested in the UNG again. Around the 1850 level, let it pull back a little bit more. I think that's our spot. I like natural gas for a longer period of time. I think it's going to be a good play. Those out there that are trading the natural gas futures can look at this around $3.25 for a longer-term hold.
Okay. All right. Are you thinking that this is going to have something to do with more demand, or is it an inflation move?
I honestly believe that we're seeing more and more natural gas conversion taking place in the United States. I'm not a fundamental trader. I'm just looking at the charts.
Right.
But there is just so much support here at 325 if the natural gas futures get down to that level. I have to think that traders are going to want to be a part of that. Now, I'm not saying it's going to skyrocket or anything like that, but I do think potentially a move to the 450 level is really in the cards, and that's still a big move percentage-wise.
Okay, it's overall long term. I think it peaked out quite a while ago, about $14. Do you think that we're heading in a longer term trend back to those old highs? Because this is a longer term trade for you, right?
No, I don't think we're going to head back to those highs, but I do think. We're not going to. I think the lows are in for natural gas. I don't think we're going to go back down and test $2 like we did in 2012. But I think natural gas could peak out around the $4.60 level. Natural gas futures. I think that's certainly in the cards. But we have such an abundance of this commodity in the United States. I really don't think that it's going to take off. I think it's a solution to the energy problem that we have in the world. So I think it's a good thing.
Okay. All right. So don't use a lot of high leverage on this thing. Keep the leverage low and a longer-term attitude with it. Got it.
Yep.
All right. Now, the trading room today, how'd that work out?
Trading room today was good as usual. My partner gave out a few small cap winners who made 10%. We had a few gap plays in there. And I think they may actually even be in a trade right now, but I am not in it. But, we posted about 5 winners today, and that's not too shabby.
No, that's pretty good. Nice. I mean, I'm not surprised, but that's pretty good. All right, let me ask a few questions of you now.
Sure.
All right, we've got a little bit of what could be a bounce, a possible turn here in the S&Ps, but I want to get your opinion on it because I've got a few people that are, they're kind of on the edge of their seat. Should we get back in? Are we waiting for lower prices? What do you think?
Well, as you know, Michael, I was on your program last week, and I kind of spilled the beans. Even my subscribers, my members were a little ticked off. They said, "Hey, why do you let that cat out of the bag?" But I said around that Friday or Monday, we would start to roll over. That has happened.
Yep.
I think tomorrow we could be due for a bounce. It's a Friday. Generally, we look for a positive trading day on a Friday. And then ultimately, I think we head back lower.
Okay. So, bounce, you're talking about a one-day bounce, or do you think it might? Okay.
One-day bounce.
Okay. Then
That's it. Just a one-day event, and then watch the market at least, I think we'll go down on the spiders, test the 164.50, 165 level, and then we'll see how the market looks at that stage.
Okay. All right. Are you thinking that the rallies that a lot of people are thinking of fourth quarter rally here? Well, I want to hear about that from you.
Well, I think we're going to get some kind of a move, but I don't think it's right now. So I think, maybe in a few more weeks or something like that as the Thanksgiving holiday approaches, we could be more inclined for some kind of a move higher again. But in the near term, and I just mean the next couple of weeks, I think we're headed lower.
Okay. All right. I got that. Talk to me about the currencies, the U.S. dollar. Do you have any feeling there?
Yeah, I have a lot of thoughts about the U.S. dollar. Right now, I think the dollar is probably at a near-term support area, so I don't think there's going to be a lot of downside for the dollar. When I look at it on my bigger time frames, we'll probably hold up here, but depending on the pattern that it makes over the next several weeks, maybe even the next month or so, then there's a chance of the dollar going back down. But right now, I think the dollar is still going to hold up. It's still going to trade in somewhat of a range. The high end of the range on the U.S. dollar index would be probably around the 82.50 level. The low end of the range would probably be around 79.50, 79.75.
Okay. Do you have any feeling for the bond market?
I do. I have a good feeling for the bond market. Right now, I think that yields have probably put in a little bit of a low. On the 10-year bond yield, I think around this 2.64%, 2.62%. We probably put a little bit of a low in, and I think that we could see a little bit of an uptick in yields, but they're going to stay in this range for a while. They're not going to get. I don't see them. At least the charts are not telling me that they're going to break above 3% in any meaningful way. They're just going to be range bound from here to 3%.
Okay. All right. What other markets or stocks or ETFs are you looking at?
Well, I'm looking at a lot of different things right now, but a couple of stocks that have caught my eye, at least in the near term, is some of these oil refinery stocks, and that they're going to be on my watch list for long plays. They're just not down to my levels yet, but you can see they're very oversold, And this is when nobody wants them. I like to be a good Samaritan and take them off people's hands. So I'm going to be eyeing the Marathon Pete, and a few other names. Tesoro is another one that's on my list, my buy list right now. So they just got to go a little bit lower, and then I'll be looking to take that off people's hands that don't want them.
Okay, give me some ideas. We got some time here. Marathon, I'm looking at right now, about $63, almost $64 a share. Do you think we're going to get much slower than that, or
no? But I think 61, 60. That's where you go ahead and take a shot with this. That's where you go ahead and place your money down and pick some of that up. This has come down off the highs, from $90 a share back in March. So it's definitely an ugly looking chart. It has had quite a considerable decline. But this is where I get interested in equities like this. And I'm not looking to marry the stock, but to play it for $5, $6, $7 to the upside, I think is very, very possible.
All right. Now, I know I'm skipping around a little bit, but I'm just looking here at the QQQ, and it seems to be moving at a fairly decent clip, a nice 45-degree angle on a weekly chart. Give me your idea what you think's happening with the NASDAQ.
Well, I think the NASDAQ is very strong, but you have to remember when looking at the QQQ, you're looking probably at 20% of the move coming from Apple. So I think Apple could drive the QQQ up to around 87.50. When you get to that 87.50 level, 82.50, when price gets up to that 82.50, it's probably a real good level to try to maybe even bet against. I think that would be probably the extent of the QQQ move.
Okay. You had mentioned FedEx on the show a few times. Is there anything going on with FedEx these days?
Well, let's take a look at that chart. If we take a look at the FedEx chart, it's still pretty strong, but right now you probably made a short-term high. Traders could probably look for a bounce in FedEx around the 107 level. I wouldn't do much with it before then. Okay, so more pullbacks on that. Yeah, 107 looks pretty attractive, though, for a bounce on FedEx, and that would just be a short-term bounce. I'm not really sure how high it would go, but that would be an attractive level for a bounce. Okay, all right. And now the commodity markets in general, food or metals, give me an idea what you're thinking there. Well, the metals market is really a tough place at the moment. When I look at gold, silver, copper, they're really, they're tough trades. Last week we were in gold. We caught that pop after the Federal Reserve. We got stopped out the next day. So they're really very, very tough trades. Right now I think that the market is a little bit complacent for my liking in everything. So, and I'm just speaking in a broad spectrum, no matter if you're looking at the S&P or looking at commodities. But I'm not sure we're getting a whole lot of commodity demand overall. I think that they're really all just trades, and that's why I think traders really want to watch the charts. Charts will tell you where the best major support levels are going to be and where the best major resistance levels are going to be, and everything at this time is just a trade. There's nothing else out there that I'm looking at, for the long haul. All right. Well, great information, Nick. Before you go, give everybody a way to reach and get into those trading rooms. Yeah, come on over to InTheMoneyStocks.com. Take a 7-day free trial to our chat room, our research center, and we're hosting an In the Money Stocks Methodology webinar on October 5th at 10 a.m. East Coast time. I will be conducting that entire class. So it's a boot camp of a day, about a 7-hour event. But come on over. You can sign up for it on the website. Sounds great, Nick. I really appreciate that. We'll talk to you soon. Thank you, Michael. Have a great day. You too. Everybody, I just want to let you know, there's a guy that's on the show. You can watch him pull the trigger. He's got a trading room you can get into, and he's up over 200% so far this year. So it's well worth getting into the room at InTheMoneyStocks.com. On the other side of this break, we're going to come back with Bob Miller, Principal Foremost Trading. We're going to talk about a